Imagine you could raise capital without the spectacle of a public offering. Private placements allow you to do just that. Here, securities are sold to a select group of investors, think institutional players and accredited individuals. The charm lies in its discretion and efficiency. Exempt from tedious registrations under regulations like Regulation D in the US, this method is not only swift but cost-effective. Moreover, the flexibility to negotiate terms makes private placements a tailored suit, fit perfectly to a company's unique needs. Now picture a marketplace without the constraints of traditional exchanges. OTC deals are negotiated directly between parties, ideal for securities that may not fulfill the stringent listing requirements of major exchanges. These deals are celebrated for their bespoke terms, crafted to address the nuanced demands of both parties involved. While they are less regulated, vigilance remains key to navigating this less trodden path. Envision a benefactor who not only injects capital into your startup, but also brings a trove of mentorship and industry connections. Angel investors typically get involved during the early stages of a company's life cycle. They offer not just funding, but also guidance, often accepting convertible debt or ownership equity in return. The terms with angel investors are as varied as the individuals themselves, providing a spectrum of possibilities for early-stage financing. Step into the realm of venture capital, where big risks meet potentially bigger rewards. Venture capitalists pool resources from various investors to support startups they believe will skyrocket. Whether it's seed or late-stage investments, VCs are not just passive financiers, they often seek significant control and input, aiming for high returns to balance the high stakes. Imagine a collective pool of investors believing in your vision, each contributing a slice of capital through online platforms like SeedInvest or Crowdcube. Equity crowdfunding democratizes investment, enabling a broader audience to partake in potentially lucrative startup opportunities. Governed by frameworks such as the Jobs Act in the US, this option amplifies accessibility, allowing your venture to gain traction and capital simultaneously. Consider the strategic alliances where established companies invest in startups, not just for equity, but for mutual growth. These partnerships often grant startups access to vital resources, including technology and market channels, aligning with the strategic interests of the corporate investor. This symbiosis can propel a startup into new realms of operational capability and market reach. Navigating the galaxy of equity-based financing requires a keen sense of direction and an understanding of your venture's gravitational pull. Each option, from private placements to strategic partnerships, offers distinct advantages and challenges. The key lies in balancing these to not only secure necessary funding, but also to maintain control and propel your venture towards its long-term vision. Remember, the right mix of equity-based financing could very well be the cornerstone of your startup's success story. Choose wisely, and may your venture thrive in the dynamic terrain of innovation and entrepreneurship.